Welcome, welcome.
Ricardo in the house. Where's Rick? Is Rick in Brooklyn or is he in Mexico?
I don't know, Steve. What are you doing, man? We're already live. What are you?
Spencer, can I tell you? Can I tell you a story? Can I tell you something? You might not believe me.
Yeah.
So how old are you?
I don't know. 34.
34. All
I
right.
had to,
So
I had to look at. I had to look at the year to.
all right. So it's a couple
check.
cycles, right? Difference. So
Yeah.
back in the day, like 20 years ago, 25 years ago, 25 years ago, and Steve's old enough to back me up on this and where he's from. Back then, when you told people that you were in finance, they would ask you, "Oh, are you in fixed income or in equities?" Right? It was way cooler to be in fixed income. Like the bond traders, people in the fixed income market were the cool kids. The equities
Is that
guys
because
were not.
because there's more bond? Was that because there's more bonds than there are stocks?
Well, I mean, it was a bond bubble with all the credit default swaps and everything going on with the collateralized mortgage obligations and all that stuff. I mean, it was like a giant house of cards. So there were a lot of jobs available and a lot of people making a lot of money. It was way cooler to be a bond trader than it was equities. And now, like, bonds are just like, right? Think about the difference. That's real life.
Total opposite today.
Total opposite. It's not even close. It's hilarious how opposite it is today.
Well, stocks were cooler than bonds in like what, the 70s or the 80s, right? Early 80s,
90s, probably 90s. I wasn't around. I was a kid, so like I wasn't around then. But like my suspicion is, 80s, a lot of bond stuff going on in the 80s, a lot of stock stuff going on in the 90s. I don't know. I wasn't around for that, but I could tell you for sure, 20, 25 years ago, it was cooler to be in fixed income than it was in equity.
What about
I was
the
thinking
third?
about it last night. I was like, how hilarious is that?
What about the third asset class?
Is there a third? Which one?
Commodities.
Yeah, commodities, that's in the 2000s, right? Everybody was an oil and gas expert, right? Like natural gas is revolutionizing the world. Aubrey McClendon. I mean, it was like a whole thing. Yes.
I think there's an entire generation that got their opinion of commodities from that one throwaway line in The Big Short when Steve Carell is in therapy and he says, "What do you do?" The guy goes, "I'm in commodities," and he goes, "Good luck with that," and that's the end of it. That's the end of the conversation.
Oh, that's funny.
All right.
I gotta go back and watch that movie. I haven't seen it in a minute. Is that why everybody wants to be like a perma bear, like short, because they watch that movie? There's got to be something there.
Yeah, that's exactly why. All right, let's start the show.
All right.
Yeah, everybody, welcome to the morning show. Spencer, Steve, JC, and Jerome Powell with you on this fine Wednesday morning. Jerome Powell is not with us here.
Thank God.
He will be he'll be on the TV later. Actually, we're gonna go live at 2:30 to kind of talk about not so much what the Fed says, but the reaction to that, because that's the most important thing. But we got a lot going on today. We got the Fed, like I mentioned. We got Stephen Weitzel on the show. Mary will stop by. She's our newest resident CMT, and it's a busy day out there. Things are happening. Silver is moving.
Yeah, you like that?
Speaking of things that like change, when was the last time that we talked about silver every day? Like, wow, it's impressive. Wow, that's impressive. Like every day, even when it was like going down, when it was under 50, it was like, wow, it's holding in there pretty good, huh? Man. Wow.
All of the metals look good.
Yeah, I mean, my metal stocks are working. Obviously, I mean, I wish I owned more. I mean, Let me ask you this before we get into the state of the markets. Here's a good question. So I bought a coal stock last week, and technically the coal stock is a basic material, right? For me, the way I thought about it when I put the trade on is like I'm getting energy exposure and materials exposure kind of somewhere in the middle. You think that's right or no?
Think of coal like uranium, like it's going to
coal and uranium give you both.
No, I think of coal like uranium, right? Like it's going to move with certain groups, like you named, materials and commodities trade, but it's still different. It's still coal. different from traditional oil and gas.
But I'm technically in my head, I'm adding to my oil and gas, my energy exposure. I know I'm not, but like in my head, I am.
You're adding to your commodity stock exposure. I think of it as one big basket.
Yeah, that's probably right. I guess we're kind of maybe saying the same thing. So this is a coking coal. So would a thermal coal be considered energy or no?
Ooh, I'll bet I know which one.
This is above my pay grade.
Well,
no, they're coal. It's considered coal.
Yeah, but isn't I'm super ignorant in this, but isn't coking coal materials, and then maybe what about what's the biggest thermal coal company? Thermal coal BTU. So there we go. So I am fucking right. Yes, I am right.
Well, so, JC, remember, there's what it is, and there's what the market thinks it is.
Yeah, Peabody is a thermal coal, and it is in the energy sector. Warrior Met is a coking coal, and it is a basic material. Can somebody in the chat that knows about this tell me? Like,
Rick says coking is used to make steel.
Yes,
and then thermal coal is used to do what? Heat things.
Heat.
Yeah.
All right.
The more you know.
No, I mean, listen, Bethlehem Steel is right around the corner. So I've learned a lot of the history of the company. It was a coal company, and then they started making steel with it. And then next thing you know, it's like the biggest company in the world. They're like, hey, we could do way better. These Lehigh engineers, man, I'm telling you. By the way, Lehigh 12-0 this year. Lehigh football.
Really?
Dude, dominating. Dude, I went to the Lehigh Holy Cross game. We put a whooping on those guys. Woo!
You did. All right. All right. Let's talk state of the market.
Let's state of the markets. All right, market's doing nothing this morning. Dow 0.0, S&P 0.0, NASDAQ 0.0. Big nothing burger this morning.
Yeah.
30-year bond futures also flat, 115 and change. Crude oil flat at 58 and change. Copper up 1.4%, pushing 540. Gold flat at 42 and a quarter. Silver up 1%, 61 and a half, with the VIX slightly up above 17 for the VIX. I mean, that is, the stock market is making new all-time highs, and the VIX is still above 17. Does that surprise you at all?
No.
All right. We got Bitcoin 92,000 down 600 this morning. We got Ethereum 3330 flat on the day, 3330 for Ethereum. Solana 137 flat on the day. Total crypto market cap. Mr. Spencer Israel 3.11 trillion. 3.11 trillion. What stands out from this morning's futures?
The market is dead right now, waiting for the Fed, and that's really been the story all week.
So you think that's the story? Throw up slide 2.
You get stuck in these little holding patterns. It's like the market's just like waiting to get past the event, and then you'll get some sort of action on the back half of the week.
So throw up slide 2. The Fed fund futures, the Fed funds is what banks charge each other for overnight lending, right?
Sure.
And it kind of starts from there in theory. For us as investors, I'm not a bank, right? I'm not a bank. I'm trying to just get paid from all these shenanigans, right? And trying to make some money from some trends. And
cool.
The biggest thing that has stood out to me from the bond market has been this. Nothing. Do a Bollinger Band width of the U.S. 10-year yield. Do monthly Bollinger Band width, and you're going to see this is one of the lowest volatility periods ever. I think 2016, I think 05 were the only two comparable periods. Early 2017, yeah, something like that. I mean, just unbelievable, nothing burger. And then here's what stands out to me. Since October of 22, the bond market has done nothing. How's stocks done? Dow's up 50%. S&P 500 is up 80%. The NASDAQ's up 125% since October of 22, which is exactly where the U.S. 10-year yield is today, at exactly 420. 420. And you think this isn't a simulation? Come on. Right here, 420. Same place it was October 22. Stock market, historic move in the face of a bond market that's completely asleep.
Yeah, so you could measure volatility compression on any time frame, just like anything else we do as technicians. And bonds right now, or rates, like JC said, similar to something like energy, JC, where you go on the longest time frame possible. You look at one of these compression indicators on a monthly, and it's really as tight as it gets. Like the Strazza indicator for TLT right now looks almost like it does for XLE, like really, really long-term, multi-year coil situation. Problem with these
I just talk about how we have something called the Strazza indicator. I just has such a nice ring to it. Like, not for nothing. I'd break your balls about it if it sounded stupid, but it actually sounds. I actually really like that.
Putting my name on a lot of things these days.
No, I like it. I'm into it.
No, it's good. But the problem with those setups is it's easy to be too early. It's easy to be too early. Like they can take time. Like a long-term coil like this, it could go another year.
I mean, dude, if you would have told me a year ago, I mean, you did tell me a year ago what the bond market's done. I'm like, it's got to do something soon. Nope, nothing for another year.
Yeah.
Right.
No, we'll see. I think you're gonna get. I think you might get a big move this week, right? On this potential pause stuff or not pause stuff.
Right, because now the whole thing, the market's thinking about what's next, right? So these jabronis meet 8 times a year, roughly 6 weeks, every 6 weeks or so, and they decide policy there. Whatever happened to the discount rate? Are you guys old enough to remember the discount rate? They were doing shenanigans with that stuff during the Great Financial Crisis. You remember that one?
Yeah.
That was like another lever they could pull, right? Basically. Yeah.
Do things.
And then, so what is the market pricing in right now on the next meeting?
Well,
the next meeting is January the 28th. You see how I know that? What do you think about that?
72% of we stay after the cut that we get today. So 72% chance of no move.
But a 50% chance of a move on the March meeting? No. I'm seeing 54% that we would stay in March as well, right? So that's what's happening right now. The market is pricing in a pause. By pause, I mean we get the cut today, and then that's it, right? Yeah, I'm looking out. You're absolutely right.
Right?
They're not pricing in a move until like April.
I'm in June. Yeah, you got one in June. So April, maybe.
Yeah, you're right. June.
April's pretty split right now. April's about 50-50. We stay.
So that's going to be where things are going to, move the most. So I'm expecting moves in the yield curve, and I'm expecting moves in the Fed fund futures, those probabilities. So the CME Fed Watch tool has a nice little tool. I think Wall Street Journal has one too, don't they?
Yes, but I think this is bullish potentially, because we're set up for these expectations to improve in favor of another cut. Right now, the market's like, you're going to get it today, and that's it. So what if something happens today?
Oh, I see what you're saying. So it's a low bar. It's not like the market's pricing in all these cuts. It's pricing in one.
If we were going in today with the market pricing in a cut in January, then the surprise could be to the downside, right?
I see what you're saying.
The market
that's a fair point.
No, we're not going to get it. But now the market's pricing the next one way out to next year. So maybe something could happen where that moves up. And I think that would be incredibly bullish for risk assets. You feel me?
No, it's an interesting point. I hadn't thought about that. No, Strazza makes a good point, guys. Throw up slide 3. Here's an interesting one for you guys. You talk about, 7 stocks, and you talk about how it's only the mega cap growth stocks and and we know that that's not true, right? Most of these countries around the world making new all-time highs don't have mega cap growth stocks. They dig holes in the ground and look for rocks, and they have a lot of industrials in Europe and things like that. They don't have mega cap tech stocks. Germany has 1 tech stock in the German DAX. The UK is 0% tech, right? So, I mean, they're all making new all-time highs. So let's keep that in mind. So we know that it's not just growth. But here's the Russell 1000. This is United States value, right? So 21% of this is financials, 12.5% industrials, 12.5% healthcare, only 11% tech, 8% communications, 6% energy.
Pretty mixed, pretty diverse.
Is this the Dow Jones Industrial Average? No, the Dow has more tech, right? What?
Yeah, but only 11% tech, and look at it. Great.
Yeah, the Dow has much as 20% tech. All right. Anyway, just something that stood out. Kind of like I'm going through my charts, doing my thing, minding my own business. I was like, hey, value all-time highs. All right. I just think it gets forgotten.
All right. So what are you saying? Value over growth? Is that what you're saying? You're crazy.
Do you think I'm saying that?
I don't know. I'm asking. We don't have that conversation as much as we used to, do we?
Because there's nothing. It's done nothing since like the summer. It's just kind of there's no trend there. So there's nothing to talk about. Why do you think we never talk about bonds? Because there's nothing to talk about.
Growth has crushed value so badly over the course of the past decade and a half. Nobody even has this debate anymore.
Well, there's no trend in one over the other. There's no the dominant trend obviously has been growth over value for a long time, but like for the intermediate term or throughout most of this year, it's big at nothing burger. There's not really anything to talk about, right? Like there's no massive outperformance.
I'm for talking about it less anyway. I think it's a stupid argument to have.
No, I think there's a time and a place. I got to tell you, this is the fewest amount of conversations of the bond market I've had in my entire career. You who have known me a long time, you remember.
You're right about that, yeah.
You remember I could not have a conversation about the stock market without talking about bonds. I couldn't
even
do
you.
It.
Yeah, like you were a big bonds guy.
There's nothing to talk about. There's nothing to talk about. So to your point, we don't have this growth value conversation very often because there's nothing to talk about, right? The reason we talked about market breadth so much is because everybody's telling me that market breadth is weakening. I'm like, are you guys even fucking looking? Are we looking at the same market? So that's why we're talking about it so much. But there's other times where like there's no debate because whatever stupid mathematical ratios they're using agree with what's actually happening. But when they don't and they're not looking, I'll be here to tell you, because I bother to look. I look. Speaking of looking, I was looking at all S&P 500 stocks the other day.
Yeah.
I do the NASDAQ 100. I could rip through the NASDAQ 100 charts fast. Like 15, 20 minutes, I'm good. S&P takes me longer, obviously. But materials, man. When you look at the material stocks in the S&P 500, they really look like shit. And a lot of the staples look like shit too. So like, there's winners and losers in this market.
We should do it. We should run through the NASDAQ 100. I could throw it up. We could do it in 10 minutes.
And it's like 15 or 20.
Well, we'll go fast.
No, maybe we'll do a live special. We should do like a marathon. You guys want to do a marathon? And we'll just do a charting marathon and see how long we could go and like invite our friends and just look at charts and just
You've done that before.
I have done that before in India. Yeah. But
right?
it wasn't so much a charting marathon as it was I gave a presentation for like 6.5 hours and then the lights went out because
filibustering
because it's India. Right. So like if that electricity wouldn't have gone out, dude, Atul Suru, he was there most of the time. And it didn't start until midnight. And I actually think we started late. We may not have started till like 12:30 or 1, actually.
It's nuts.
Dude, it's nuts. And
I don't know how you talk for that long.
So we get done at like 7 a.m. I'm in Mumbai. And then the NBA playoffs were on. It was the Rockets against the Warriors, I'm pretty sure. I think it was Rockets, Warriors. And it was like 7 in the morning. I'm drinking Coronas in my hotel room watching the game after a 6-hour presentation in India. That was funny, right?
I don't know how you do it.
I don't do it anymore. That's a young man's game. It's a young man's game. I don't have it in me anymore. I got other priorities right now. What about this healthcare? Is healthcare really taking
looks good still?
I mean, bigger picture, throw it up.
I mean, look at where it's come from.
No, I know. It came from where I said that we should be buying it and everybody laughed at me. But over the last 2 weeks, it's really gotten hit. Biotech's hanging in there pretty good, though. They got hit yesterday, but Biotech's made new all-time highs on Monday.
Still the leaders in that space.
They got hit pretty hard yesterday. But yeah, I mean, we've done very well in biotechnology. Wow. I mean, some of these moves have been, made our year. I mean, fuck. Some of these. Remember, I mean, if you looked at my portfolio over the last 3-4 months, you would think that I'm some kind of mad scientist.
Big biotech guy.
Dude, speaking of like, adapting to the market, we never talk about the bond market because there's nothing to talk about. We never talk about growth value these days because there's nothing to talk about.
No.
But I've never owned this many biotechs in my entire life. It's not even close. I couldn't tell you a time where I owned half as many. How about that?
Every other day you look at your account, something's up 30-40%. It's really been quite the environment for this group.
Remember you were annoyed with me because all I wanted to do was talk about biotechs? See,
Yeah.
sometimes I got to be annoying. You're like, can we talk about anything about biotechs? Remember? You're like, like, all right, but they look good. So I don't know why you know, what do you want to talk about bonds? Bonds are boring.
We're talking about them a lot. That's all.
I just think, for good reason, I just think that it's hilarious that the kids these days, I mean, everybody wants to be a stock market trader, crypto, but before stocks became sexy again.
Crypto's the new stocks.
Dude, 20, 25 years ago, it was cooler being in the bond market than it was in the stock market. I mean, when nobody asks that question anymore. Nobody asks that question. Oh, you're fine. Oh, are you in fixed income or in equities? Have you noticed? Nobody talks like that these days. That's how it was 25 years ago.
Well, JC, nobody even talks like that these days. Is I think true too. Where back in the day, everybody wanted to work for a hedge fund. Everybody wanted to go work in investment banking. Like those were the jobs that my friends wanted out of college. I don't think that's the case anymore. I don't think it's cool to work on Wall Street.
Is that the case because you grew up in Lower Connecticut? So that's where
I don't even think it's
capital of the world.
I don't think it's the case there anymore either.
Really?
You know? Yeah.
Wow.
The financial crisis changed everything.
And they're seeing their parents and uncles blow themselves up, and they're like, I don't want that shit. Yeah. I get that. Versus when I was coming up in Southern Connecticut and when I was going to college there, I mean, this was in the early 2000s. So, you know, those were some good times they had in the 90s and the 80s. So I could see that.
Right.
Yeah.
And I think, you know, now a lot of the interest is probably over on the West Coast and technology in Silicon Valley, right? And it should be, because that's where the growth is. That's probably where the best jobs are these days. Back 20 years ago, the best jobs probably were down on Wall Street.
You know, I was talking to somebody yesterday and, you know, 28 years old and, you know, making some decent money and just all in on Bitcoin, right? That's just you know, asking for advice, you know, kind of, you know, what he should do. And, you know, he seems like an ambitious guy. So, you know, I told him to start building out new strategies that are uncorrelated to Bitcoin, right? There's other things that you could be doing. And, you know, I was getting some pushback from some other people. They're like, no, dollar cost averaging, S&P 500. And I'm like, yeah, fine. For one of the strategies, maybe, or definitely, right? I do that for sure. You know, but I was like, you know, but things like, oh, you know how many people lose money day trading or lose money trading options? Yeah. So you got to start somewhere. They're like, oh, but they're going to blow up. Yes, blow up as soon as possible so that you could figure it out. And then you could really master that strategy, because the learning part doesn't start until you blow up. You got to blow up. And then you find, oh, okay, got it. So we can't do that. Okay, so we'll just do this instead, and then we'll make money, right? Like you got to figure it out. You got to be in the fetal position. If you're not in the fetal position, like you haven't been there. You haven't hit rock bottom yet. You got to be there. You got to be fetal position. I remember vividly, I was in fetal position multiple times. The last time I was in the fetal position was, I'm pretty sure it was like a currency move. I remember being on my couch on 55th and 1st, you know, just laying there, grown adult male, laying there in the fetal position. This must have been like 2010 or something, 2011 maybe, something like that. Yep. Just sitting there like that. Oh, yeah. Like, what am I doing with my life? You know, that was probably the last time I could remember where things were, you know.
Got to go through it, right? Got to go through it.
That's right. What do you say, speaking of the fetal position, should we bring in one Kenny Glick?
Kenny Glick, ladies and gentlemen.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 problems, and I still kept it 100. Hola. Yeah.
Bro.
Yo, what up, Kenny Glick? Tell me the worst story of trading that you've ever had in your entire life.
Mine?
Yeah.
Oh, wait, let me get the notebook out. I've got so many stories. Where do you want me to start?
We'll be here all night. Right. How
about being naked?
Give me one early on when you're younger. Give me a younger one.
Oh, okay. Early on, when every IPO was opening up, this was 1999, 2000, and everybody's buying. Like as soon as the IPO comes out, everybody buys their 1,000 shares, and they pop 20 points, right?
This is what year?
This is 99, 2000. I think
you're down in Financial District?
Where was it? Yeah, I was down. I was 5 Hanover Square at that point.
Nice.
Right
Harry's
there.
right there on the corner. Nice.
Yeah, very cool spot. Yeah. I got arrested in a little alcove there for smoking weed too. But anyway, what's it called? Yeah, so everyone's buying every IPO that comes out. So I'm like, I was more of a conservative still trader at the time. I would wait for them to come out and see how they would jiggle around and buy it. The one I buy, I'm like, all right, this next one I'm getting involved. Drops 80 points in got to be like, I don't know, 5 minutes. It was just absurd.
You remember what it was?
It might have been CSIQ, actually. Back in the day.
I remember CSIQ.
CSIQ, I think.
That's still around?
Yeah.
Canadian Solar?
No, sorry, it wasn't CSIQ. Oh, C-Quick. It was some whatever, by B2B bullshit. I don't know what it was. But it was just no, that's Canadian Solar. No, yeah. It was something with C's and Q's involved. I'm not sure.
Sure.
But it was just awful. And of course, the one I chose went straight to hell. And at that time, losing 80 grand in 20 minutes, we could actually handle it because we were doing like $5 grand a day. So we're like, all right, I'll make that back. And the stock never came back. It dropped another 40. It opened up like 220. It was just so stupid. But I've always had a rotten luck like that. But now here we are.
Listen, but I think this is what helps people the most is those stories, right? Like you have to understand, like there were hard lessons, that you have to learn them that way. Kenny and I could tell you a million times, and Strazza will tell you a million times, but until you're actually in the fetal position, until you understand, until you can't sleep at night because you're too big, you're not going to know what is too big. Yeah. Right. Like now these days, I lose sleep at night sometimes because I don't own enough of something. I have the opposite problem. I feel like I'm not big enough. Like I'm not actually losing sleep. Right. I'm fine. But like if I have a problem, it's that like, oh, fuck, I need more of it. Like I'm not too big in anything these days. Right.
Right.
That's good. So, all right, Kenny.
Yeah, my mouth actually just went dry telling that story again because you're just sitting there like, what? Yeah.
It takes you back.
Yeah. I can remember it like it was day like ago. And then I got stories. I got another one. So I had, this is when I had some positions. I had, 1,000 shares of eBay on because to me, when eBay came out, I was like, now that's a company I want to invest in. They were like the, matching buyers and sellers on the internet. They're like the bookie of goods.
Perfect.
Taking the VIG. I'm like, no inventory. I like this. So I walk in, the stock's down 38 points. And I'm like, oh, another disaster. Look at me. And it turns out they were hacked. Right. And I was like, well, who cares? They're still the same company. All right, they got hacked. All right, so the stock's getting hammered that morning. And then it drops another 30 points. I'm like, you got to be kidding me. So I was like, you know what? Fuck this. I'm putting up a stand. So I bought another couple thousand shares, and this thing just made this monster faux show, bro. Like we've been calling it since the 90s. And I turned the 70 grand loss into basically a 50 grand day. And then I went home to play paddleball with my dad. And when I got home to check where eBay was, it was up another 40 points from where I sold it. And my legend was born.
Sometimes you get lucky and, it happens. We own something and like United Health, we bought leaps on that a few months ago. And then like 3 days later, Warren Buffett and David Tepper at the same time announced that they bought it too. Right. I didn't know that. I got a better feel, by the way, but another point. I didn't know that was going to happen. I was buying it for my own reasons. And then I got lucky. Uncle Warren and Tepper were like, yo, we're fucking loading up on United Health. And I'm like, hell yeah. And then we were up 150% in like 3 days.
Nice.
So, but nice. You got to put yourself in that position to get lucky like you did in the eBay, like I did in United Health, because it goes both ways. Right? It goes both ways.
Well, now, like we were saying the other day, if we got something that works this well and we believe the market's rigged, which I prove every day, now I just stick to the trade. And we're at 1,162 in a row now. And if you guys were with us this morning, it was
explain what that means. Explain, because you say these numbers, but I don't think people understand what is.
You know what? I'm glad you finally said, please elaborate. Let me show you.
How am I saying it? Because it's a lot of words. Day VWAP.
1 minute multi-day VWAP reversal, gap down stock. So, ladies and gentlemen, let me explain this to you. This was a trade that I've been taking my whole life, right? Prior to VWAP, it's just an earnings reversal, right? If a stock reported earnings, it was down. If it went green, we loaded up because that reversal was a very visceral moment. The shorts would cover, the longs get excited, the money gets divided, but that would work. So now we got the faux show bro under the VWAP. Instead of waiting for the stock to go green, we're buying it during the fakes out and the shakeout. So right here, when it faux showed right under the VWAP, so that's today's VWAP. The orange line is prior day VWAP. So when that's set up, and this is the tattoo I'm getting on my chest when we go to Vegas. So if you get a new low break, then it gets back to VWAP, and then they try to do that fake them out, shake them out by the VWAP, breaks over that, gets over orange line 1,162 times in a row for the last 4 years. You've got a profitable trade out of it. Now, again, that might sound absurd. It's not even a lot of trades. It's 4 years going. You know, it's not a lot. Some people do 200 trades in a day, but this trade transcends anything. I've never seen anything work that makes sense. It's easy to understand. It's algorithmic, boogie, woogie, woogie, and you're loving this thing. And your day's done before the day even got started. So ripping on Chewy. Plus, it feels so good to buy this stock because I actually like the company. I am a member of the club. And when a stock like this goes green, it lends to that, you know, again, it doesn't make the trade better, but it feels better when it's doing something that you thought it was going to do. And then VWAP validates the idea, and then you get paid. So awesome day, awesome way to start. We had another one, Olma, OLMA. Let me just show you the difference between Olma and Chewy. So Olma, we got this monster move, but then she Jerry Orr-backed. So this was insane. It did the Jerry Orr-back. So right before I had a chance to go, oh my God.
And why is it called the Jerry Orr-back?
Because it's giving it all back. Jerry Orr-back, the most underappreciated actor of our generation. So if you miss a move on the way up, right, and then you got this. It broke the VWAP, came back. This is what we call the finger of God. It looks like a knuckle. And it rolls back over. It breaks the VWAP. And look where she goes right back to. Jerry Orr-back, from back to 35 down to 27. So what goes up? You know the song. So very nice trade. If you missed it on the way up, crush it on the way down. Now, you know, again, with the Chewy, I look for the same thing. As much as it was a great trade on the way up, I'll look for some sellers to show up. And maybe we Jerry Orr-back this bad boy too. But you know, when you start the day, we got Fed meetings, you get paid rather quickly. We're going to put on some house music and dance, I think, for the rest of the afternoon until the Fed.
What's the song of choice of this house, these house beats these days? Is it old school? Like, is it, you know?
No, I've been going new.
Back in the day?
No, I'll go new, but I'll start with you. Let's go. I'm going to go, I got some old ones. You guys remember this one? This is Energy, just Joey Belcher. Come on. This is old school right here. This is how it all got started. 1992 in the house. Let's go. Who's coming to Vegas?
Ladies and gentlemen, Mr. Kenny Glick, hit the bid. Go get him. Go put on a trade with Kenny. Put on a faux show, bro. You're like, honey, how was work today? Oh, I put on a faux show, bro, with the grandfather of day trading, Mr. Kenny Glick.
Yes, and you haven't lived.
Smack you over the head, but when you show her how much money you made, she'll be like, oh, all right, nice job, sweetheart.
You haven't lived until you've been faux show broed. When you could use it as an adjective or a verb, right?
Yeah.
I don't know. I don't know grammar. Yeah, you know what I'm saying. All right, listen, be careful out there. So get paid quickly, and then we'll wait for the Fed to hopefully raise interest rates, kick over the podium, and just give everybody the finger.
Yeah, I'm pretty sure that, as funny as that might be, I don't think that's going to happen.
I put $10 on it. If that happens, I win $20 million. So
Right.
I needed to give everybody the finger, raise by 1 point, and then knock the podium over and run. I got $10 on it.
That would be
one time, baby, one time.
That would be awesome. See you, Kenny.
It would be great. I'll take the under.
Later.
Yeah.
Somebody just made Kenny's $10.
Whatever the over under is, I'll take the under. If the under is 0, I'll take the under. All right. Hey, we got Stephen Weitzel in the house, who's here, and he also has like a fun little announcement to make about a new show that may or may not be happening this week. I don't know.
Is that foreshadowing? I think that's foreshadowing.
You would call that a tease. Foreshadowing is more subtle. Foreshadowing would be like if I said the word Weitzel and new show in a sentence like an hour ago, that would have been foreshadowing, right? This was a little bit more to the point. Anyway,
how Shakespearean of you.
Weitzel's here. Let's bring him out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Weitzel, how are you, sir?
What's up, buddy? How we doing?
No, I appreciate you wearing the green, in honor of the Hurricanes making the, the college football playoffs. So I see what you did there.
I'm excited for you, but I think we both know that Notre Dame got screwed, and it was not by the Hurricanes.
Let me just tell you, there's a lot of people around the country who are both surprised and happy to see Notre Dame finally get screwed. Right? Fuck them.
Yeah. Well, I mean, I guess you got to join a conference, but I really thought that that Alabama should have gotten booted the way they played towards the end of the season. The way they played against Georgia, I thought that they would be out. I just don't understand JMU getting in over Notre Dame, right? You understand how you've got to have.
Isn't it the top five? Isn't it the top 5 conference champions get in? That's why.
Well, no, because Duke isn't in, right? So Duke won the
top
ACC.
Top 5 ranked conference champions. I think
look, I guess they've changed the rules so much anymore. I don't understand. I mean, it used to be that, or so last year, if you won one of the Power 4 conference games, and you were conference champion, you got a bye week 1. That's not the case now. Well, now we don't even have the ACC champion in the dance. But I just thought it was horrible that Duke ended up in the ACC championship game. Like, it would have made so much more sense.
Well, if Georgia Tech wouldn't have blown it to Pitt, none of that would have been a problem.
Dude, I'm going to tell you, well, it wasn't just that. I mean, it was the NC State
Weren't you there with Mike Martin?
I was. So Mike Martin, I had a lot of people that I got on this Georgia Tech bandwagon this year. Mike Martin, Phil Pearlman is tuning into these games. I'd be at a game and I'd get a text message from Phil, "Let's go, baby." And so I had so many people on this bandwagon, and we just lay eggs. And dude, I literally that Pitt game, we're down 28-0, 2 minutes into the second quarter, and I'm just staring into blank space. I'm in the twilight zone, and we do the worst possible thing. On 2 occasions, we give ourselves hope. We're right there. And hope is a fickle friend. Yeah. And it proved itself to be that once again that Saturday night in Atlanta. And the funny thing was, so Mike Martin, he comes to the game, and I'm trying to give him the royal treatment. I take him down on the field, pregame, and we get up into the box, and he comes and he sits by me. I have a certain seat in the box that's mine. Everybody knows that it's mine. And so he sits next to me. And I don't know if it was my wife or some of my other friends that were there. They were like, "Are you sure you want to sit there?" And he was like, "Yeah, we're on the front row." And literally 5 minutes in, he's like, "I can't do it. I'm out." It's too loud for him. It's too intense. And so he retreated, further to the back. But unfortunately, it was not the entire experience that I wanted him to have for his first Georgia Tech game.
Everybody go give Mike Martin a follow. He does great work. He's a big behavioral guy, futures trader, good friend of ours. That's cool that you got to do that with him. Let me ask you something, Mr. Weitzel.
Yes, sir.
Sector rotation is the lifeblood of a bull market, right? We've been seeing a lot of that.
I'm hoping we see more. So I was on a call yesterday afternoon with some people that you know very well, and we were talking about creating a new scan, a new strategy. And a lot of it is going to be predicated on the fact that we've got some of this sector rotation that's happening. Speak of the devil.
What he's saying is he crashed our analyst meeting last night, JC. Did you hear about this?
Look,
is that allowed? Is that over the line?
It's not.
Is that against the rules?
It is so above the line.
All right.
But let me say this. I'm so happy to have been integrated into this family, whatever it is, family of misfit toys. I'm so happy to be a part of it. I I hate that I love JC. I really do. But I can't tell you how much I love Steve Strazza.
And we love having you. We love having you.
But so we're this call yesterday, and we're talking about that some of the best setups in the market right now, they're not the mega cap tech names. I mean, they're energy names, they're healthcare names. Steve knows that, I've been finding some opportunities in some of these biotechs and the energy names, right? I mean, some of the energy names look phenomenal. You could trade them against very well-defined support with some, really nice upside objectives, nice dividend yields.
You're in the mood for an above market yield, right?
I am definitely in the mood. I don't know anybody who is not in the mood for an above market yield.
Hold on. Let me explain to the audience who might not know Stephen Weitzel. So Stephen, is a $1 billion RIA, plus, so manages money for households, right? But then in addition to that, Stephen has his own accounts where he is, maybe arguably making more aggressive trades, more short-term trades, a very different strategy than what he might be incorporating, with his clients at his RIA. Is that right?
That is correct. But I'll say this, and yesterday I had a lot of car time. I had to drive down to Central Florida to see a client. And so I'm tuned in to the morning show yesterday while I'm driving down 75, and I hear the interview that Steve's doing with Phil Pearlman, and they're talking about Steve's experience of growing into being the trader that he is today, and but Steve and I, even though I think we see things largely through the same lens, I think we could come to similar conclusions about things.
Yeah,
we are different people in terms of the risk tolerance that Steve has, even for his own money, is far different from the risk tolerance that I have for my money, and certainly for my clients' money. And so even the trade.
You and I both have like big families. Like we're in different stages. When I was in Steve's situation, I was behaving more like Steve. It's just different, right?
Yeah.
There's nothing wrong with it.
No. But I'll say this: I do think there's a personality. I mean, and maybe Steve's personality would change in the future should he have children. I don't know. Maybe it will. But I think
he's going to have his 529 plans, and he's going to be thinking more, about other types of accounts that serve other functions.
He's going to be pissed that he can't YOLO something in that 529.
Probably. Yeah,
I'll be YOLO in plenty in other accounts.
Yeah,
you know how many crypto punks I'd put in my kids' accounts if I could right now? Come on.
That's quote of the day.
Yeah, Spencer, can we delete that from the stream?
Oh God.
So Stephen Weitzel is not like, he's not a big crypto guy. He's not, any IBIT, any of that in the client portfolios?
No, we're not doing any of that.
Overweight micro strategy.
No, we're you know what? Let's look at the micro strategy, Steve.
Are you flipping the book long Solana there, Mr. Weitzel?
No, we know that is definitely not going to happen. We know that is not going to happen. So
you don't even dabble in a Coinbase? Quality.
There
exposure.
Okay, there have been some good setups there in the.
You know what we should do? Here's what we're gonna do. Weitzel, how do we get some cash? You got plenty of it. You'll be fine. Get some cash. Figure out how much you want to allocate, and we're gonna, in Miami at the Portfolio Accelerator, we're gonna open up a Coinbase account for you. We're gonna do it together. We're gonna deposit the money, and you're going to put on your first crypto trade right there with us. We'll all do it together, right? It'll be fine.
You cannot come to our gathering in Miami, the crypto capital of the world, and not be long crypto.
Should we take a field trip to the
I
bull?
think we
You know,
can't-
they have the electric bull, the crypto bull. Should we go there? It's in the hood in downtown. So I don't know that we want to do that, but
I've been to Miami before, and I did not have to like show a crypto passport to be able to
not
come
yet.
in.
Not yet.
So
yeah, no, you
not
need
yet.
All right, so that's what we're doing. I just decided.
Yeah,
I'm willing to start with $1,000.
Bullshit.
Fine, then we're gonna make a
Stop being such a cheapskate. Pony up. You're talking about your first row down on the field, and you're putting a grand.
It.
Yeah, we're talking about
some
risk
zeros
tolerance.
and commas to that, my friend.
We're talking about risk tolerance. Let me say this: speaking of, I want to go back to some sector rotation, but
you like the owl,
and then I definitely got to preview this new show experience, but I still I think that there are still some risks in the market. Steve brought up strategy as an example. It's maybe looks like it found some support at those early 2024 highs in around like the 170, 175 range.
Why do you bring that one up in particular?
I'm just saying, I think that there are a couple of names that are a little more indicative of the epicenter of market risks right now.
And you think MicroStrategy is part of that? You don't think it's like this, like the side, thing, this like side piece?
Well, I think it's probably a pretty good measure of the leverage that is involved in a lot of these companies right now. And I know Steve,
when you add it all up, is it really relevant?
Is an isolated event, of course not, but there's always, and so here's the deal. The difference between like a mania and a bubble, right, is that in a bubble, you have bondholders that get hurt. It's not just the equity holders that are going to get wiped out.
Because things are on credit.
What?
Because things are on credit?
Because things are on credit. Right? And people who are lending money are not in their mind assuming that there's a risk of default. They're looking to make a more conservative investment. Now, I don't know if anybody who's bought a strategy convert thinks, this is gold, right? It's not
exactly
gold.
A treasury bond.
No, it's not. It's not a treasury bond, but the amount of leverage.
You do buy bonds.
I do buy bonds. Now I know you guys.
Weitzel's the only person I talk to about bonds these days. Seriously.
But I heard you guys talking about it before I came on, and obviously we got this Fed meeting this afternoon. It'll be interesting to see.
Are you going?
No invitation for me.
Any thoughts on it?
Would you go if you were invited to said meeting?
Oh yeah, of course.
You would go?
How much of an honor would that be?
Is that an honor? I don't know.
I think it would be. But
be at a Fed meeting? That sounds boring as fuck.
But look, I think I could add a little bit of spice to the crowd. But
yeah,
that's probably It's a low bar though. It's not going to take much.
It is. But so listen, I've been to a number of different conferences over the last couple of months. I was out in Newport Beach about 6-7 weeks ago, visiting my friends at PIMCO. Obviously, lots of bonds means
bond guys out there. Yeah,
and I have a lot of respect for those guys. But so we did a town hall with Rich Clarida. So he's out, he's there now, like a managing director or whatever his title is. But he was an assistant Fed chair from 2018 to 2022, and so. But they're talking about their outlook for interest rates and how many cuts they think that we're going to have over the next year, and a lot of these shops they think we're going to get 4 or 5 cuts. And so,
in what time frame?
12 months. Over the next 12 months, they think we're going to get this many. And so I asked a very simple question, and I said, listen, help me reconcile this. In my opinion, the market is the best predictor of where interest rates are going. And if I look at the yields on the short end of the yield curve, the 12-month bill, the 2-year note, the yield on the 12-month bill right now is 362. These are forward contracts. I'm not trying to get way too deep in the weeds here on the economics, but they're effectively trying to price in what are Fed funds likely to be when these bonds mature. So the 12-month bill is a pretty good proxy for what the bond market actually thinks interest rates are going to be 12 months from now.
Ones and twos. Would you agree? Yeah, ones and twos.
Ones and twos. And guess what? The 1 year or the 12-month bill right now is at 362. The 2-year note is at 361. The market is not anticipating that we're gonna get one more cut. One more.
Why are Fed fund futures giving such a different signal from price action in the bond market itself?
I've asked people to reconcile that for me.
Signal?
Yeah, Fed fund futures. If you look out 12 months, listen,
there is a 60%, right, Steve?
There's a 60% chance looking out to December of 2026 that we will get anywhere from 3 to 5 cuts. That's where the market's at right now.
Yeah, and so this is what I ask. This is what I ask the biggest bond traders in the world. If that were true, why would the yield on the 12-month bill be 362?
And what they say?
Would not be. It would not be. They don't have a good answer. They do not have a good answer.
Okay. Really?
They don't. And so I lean more in the camp right now that regardless of whether Jerome Powell stays on in his role, which I don't think he's going to, I've got people who tell me that, when Trump appoints a new Fed chair, that, he's going to bring in a yes man. He's going to take interest rates back to zero, and we're going to have all this inflation. And I'm like, look, the bond market is not saying that.
Right.
The bond market is not saying that.
I'm surprised they didn't have a good answer. These are like the bond guys, right? Self-proclaimed.
Let me say this. In my mind, in this business, whether you're managing investments, you're dealing with clients, that is a very simple question. It's a pointed question. Help me reconcile why the yield on the 12-month note would be so different from the Fed fund futures. And if you can't answer that concisely, then you lose.
Yeah.
Right? There are very basic questions that should have basic answers. If you can't come up with them, then you might want to check the premise you're entering in with. So
is there, most times big market moves are impossible to forecast or see coming, right? They're not really known, but could it be that the next big, period of volatility comes when we finally get some sort of clarity on who the next Fed chief will be? Because there could be a really big swing in these expectations that we're talking about.
I don't know. I don't really know how much these Fed chairs, I think they are more responsive to market dynamics than they are in charge of market dynamics. And so
how do you feel about, just generally speaking, the fact that, the stock market's at all-time highs, everybody's making all this money all over the world, not just in the United States, and they're out here cutting interest rates, right? So bringing it back to equities, I know that you're probably more of a bond guy, or I would say you're definitely more of a bond guy than me or Strazza. Not so much a crypto guy, but as
to say that I own them at all.
But as an equities guy, right?
Yeah.
Isn't that a good thing for equities? Doesn't that mean line go up?
Well,
or hard to go down?
One could reason that, if rates were lower, that it's going to be better certainly for more leveraged companies, that if their debt service is easier to meet. So I think that still would be favorable for like the small caps. I think they're more sensitive to interest rates than the big caps out there that they don't really need to borrow a lot of money. Now, some of them, the calculus is changing for a lot of these mega cap tech firms that are now having to engage in a lot of capex for this AI build out, which I'm still quite skeptical of. But that's a story for another day. But yeah, I do think that there are still good opportunities in the equities market, that whether it's going to be from an interest rate cut or it's going to be maybe a breakout in commodity prices, that there is.
And when you
going
mean
to
breakout
be,
in commodity prices, you mean energy.
Yeah, I mean, so what energy comprises 40% of the CRB index.
It's the only one not working.
It's the only big one that hasn't broke out at this point.
Yeah.
And so what I've kind of found interesting over the last couple of days is that, crude has still been stuck in the high 50s, but the energy stocks have looked okay. And so
who's right there?
Yeah. And, I have some of my, even though I love the setups in the energy names right now.
Me too.
You still have this thought of, Trump 1.0 was not a good season to be invested in the energy names.
With
right?
Solar energy, though. But solar energy,
so, yeah,
pretty good.
Yeah, that was a little bit of a head scratcher, wasn't it?
But traditional energy, great under Biden. Biden stocks, oil and gas.
Shocker, absolute shocker. Because remember, they were going to cancel it.
I don't make the rules, Steve. I'm just telling you what happened.
I remember being on the phone with Larry McDonald in December of 2020, and I remember saying, hey, what if there was all this big concern post-election, the oil prices were getting hammered and nobody wanted to own the energy stocks because they were going to be banned or whatever. I was like, what if the boogeyman is actually Santa Claus? This is a gift. And look what happened. Unbelievable.
Yeah.
So anyway, there are really good opportunities out there that's not Mag 7. And I think that we're still going to get rotation into that. I think we continue to see it rest of world.
The S&P 500 X Mag 7 just made new all-time highs.
Yeah, I like it. I like it. We're getting some breadth expansion. And I think that's a positive thing for investors. So let me mention, speaking of investors. So I'm so humbled, honored that tomorrow we've got a new show starting. It's going to be called The $1 Million Question.
Oh, it's
going to be on.
It's a great name.
On this network.
It's going to be good.
So look, we are going to be talking to investors.
Yeah.
We're going to be talking to some financial advisors out there about things that they should be considering for their clients. But look, in traditional media, people can't turn on CNBC or Bloomberg or Fox Business or whatever they're watching, and all they're going to see is bulls and bears, right? They've got trades that are putting on, but they're like, well, what do I need to do with these big picture things that are going to move the needle for me? And how do I solve this particular issue that is very impactful for me? We're going to be talking about those advisory focused topics, investing, not so much trading. We may have some trades from time to time, but we're mostly going to be talking about investing. We're going to be talking about things like taxes that nobody likes. As a matter of fact,
it's great. We need that. We need that.
We need that. Nobody is doing that. There's no real outlet for that.
Yep.
Speaking of taxes, quick promo. Tomorrow after our new show at 11 a.m., I am hosting a tax shelter workshop for business owners. So
really?
if you are a business owner out there, and I know some of you guys out there are killing it. Even in this economy, you guys are killing it, because I know some of you, and you have tax problems, and you need to be doing some basic things, and you're going to save yourself tens of thousands of dollars in taxes There's 3 main things that we're going to hit in that workshop. Spencer, can you drop the link in there or put that QR code up?
One thing that I think all humans have in common, right, is wanting to pay less taxes. So,
dude, do you see?
We should talk about it more.
In Great Britain, they're raising all this taxes for all these rich guys, and they're all leaving. They're all leaving the United Kingdom. Right? If you want to do the opposite, you see, right?
Yeah. Well, the government has never really been, very insightful about.
No, this is really important, because, and this is why you have a financial advisor. Like I tell people, I was at a party the other day. They're like, oh, I was like, yeah, my financial advisor says this, and they're like, JC, you have a financial advisor? It's like, yeah, of course I have a financial advisor. I don't know anything about this shit. I don't know. I mean, I'm learning, obviously. Like you learn every time I have a conversation, where you learn something. Every time I talk to Stephen Weitzel, I'm learning something. It's so important. This is not what we do. We're good at other things.
Yeah. And so I think that there's a real need in the market for this type of insight. We're here to provide it provide it to people. But again, if you are a business owner or if you know a business owner, they need to be on that webinar tomorrow, 11 a.m. Link should be in the description or in the chat. But if you can't find it, you can email me, info@reveillewealth.com. We'll send it to you. But I'm super excited about the show tomorrow, kicking off here. $1 Million Question.
It's a great name, Weitzel. Who came up with that?
It was a collaborative. It was a collaborative effort. We batted around a handful of names, but back in the day, like JC, for our parents, it was the $64,000 question. Remember that game show? So there's been some meaningful inflation out there. We've got $1 million questions now. But look, for people that have millions of dollars, the questions that they're asking, what do I need to do with X, Y, and Z? It's worth millions to them.
Yeah.
And so that's what we're going to be talking about on this show. Excited about the opportunity, and we look forward to seeing everybody there.
Dude, I'm stoked for you, and I'm stoked for the audience. I mean, this is good stuff. I mean, like I said, every time I'm on the phone with Stephen Weitzel, I'm learning something about things that I don't know anything about, because how could I?
Yeah, so I'll just give you this real quick preview for tomorrow, because you guys on these shows, you're talking about trade setups, and Kenny's day trading, right? Which is so like it raises my blood pressure. Okay.
Yeah.
But tomorrow we're going to be talking about market timing, because our industry tells you cannot time the market. And we're going to be exploring that idea. And is that true? What are the nuances behind that? And what is an investor actually supposed to be doing? Do they have to just sit on their hands all the time? We're going to be talking about that tomorrow on our first show.
Ooh, I want to know the answer. And everybody, make sure you go, because you never know what could happen at a good tax shelter workshop. For example, Daniel said, I met my ex-wife at a tax shelter workshop. You guys should go.
Wow. I met mine at a bar.
All right, boys.
Good for you,
I
Steven.
appreciate it.
Awesome. Looking forward to it.
Looking forward to that, Steven. Thanks for coming by.
Appreciate you, boys. See ya.
Weitzel. Stephen Weitzel wearing green for the Canes today. We appreciate you, Mr. Weitzel.
About time we got him his own show. Really good stuff.
Yo, MicroStrategy's in a 60% drawdown.
Yeah, man. Where you been?
No. I mean, I knew it was severe.
Loser stock.
I just counted right now how down it is. 60%.
It's a lot down. Yeah. Yep. Gross. Terrible.
That is a serious drawdown. I mean, 60% drawdown.
Speculative
Not
growth
in the S&P 500.
Yeah. No.
Never gonna be. When does
they don't blow up?
So you know how we always say the day that MicroStrategy blows up, you buy Bitcoin.
Not the day. We talked about this. You say that. You say that. I don't say that. You say that.
Oh, I thought we were in agreement there. We're not.
You gotta let it. Not the day. Like, relax a little bit.
I'm thinking the day.
Don't get your panties all up in a bunch. Let them dance. Let it clear out a little bit, right?
Yeah, I don't know. I think it's gonna be a swoosh. Yeah, I think you put in crazy limit orders and like see if you get filled. But
it's gonna be bad.
what do we do?
I don't think it's happening right now, though.
Whenever Newmont gets added to the Dow, you short gold.
Yeah, because it's happened like 10 times, right?
Has it?
I don't know. Haven't they been added to big indexes before? Are they still in the S&P 500?
No, Newmont's never been in the Dow.
S&P 500.
Yeah, probably.
I don't even know if they're in it. We got to go through that. We gotta look at them. Go look at the stocks.
We gotta look at the stocks.
Oh, we gotta look at the stocks.
I mean, Newmont used to be a blue chip in my day. Back in my day.
We gotta look at the gold stocks.
I mean, you know, I got the Buenaventura, I got the Sibanye, right? Like those, you know.
Yeah. International metals, love it. Hey, speculative growth for you, yes or no?
It's not so much international metals. It's just metals. It's just that's where they are.
Hanson, try and keep up. Strazza was long, MicroStrategy. Yeah, of course he was. He was short too, and then he was long again, then he was short again.
I asked Strazza a couple of days ago, hey, Strazza, you like crypto here? He goes, no, not yet. But I did buy Coinbase calls today.
Don't do what I do.
Like, I'm like, what does that even mean?
It's complicated.
Like, no, not yet. But I did buy Coinbase calls. Saying, which is it?
It's complicated. There's not
a couple of days ago. What day was it? Monday afternoon?
Ignore me.
That didn't make any sense at all. I was more confused than ever.
More than you think.
I went, I bought a crypto punk and a few dick butts.
You know, well, don't worry about it. It's not a big deal.
Putting them away. You see what I'm doing here? Just, you know, putting them away.
For the kids.
I got one that I'm saving. I think I got one that I'm not going to sell until it hits $1 million. At $1 million, I got to sell it.
$1 million, huh?
Yeah, at $1 million, I'm not going to probably own any of these NFTs.
As much as I would love to talk about JC's dick butts all day, we have Mary in the house, and I want to get her on here so we can she sent us a few charts. We appreciate that, and I want to see what she's watching. Moving. The market's already open. Let's go,
moving, Spencer.
I know things are happening.
Mary,
guys.
What's
up?
Everybody loves Mary.
Oh, thank you. A great movie, right? Back from the 90s.
Well, I was talking about you, Mary.
Oh,
you know, everyone's a fan. That
Thank
Mary,
you.
she's great. That's what they say. That Mary,
oh,
she's
that's
great.
sweet. That's nice to hear.
Mary, what are we watching here? What do we have? We have Slide. Where are we at, guys? Slide.
Yep, I brought a bunch of charts. We don't have to necessarily cover them all. Actually throw up the GE Vernova, just because this is moving today, and I don't exactly know the news on this, so I'd love to get some perspective. I have not been trading much here the last couple of weeks.
Wow.
But I did get involved in this one right before Thanksgiving, because that last red candle that you see there in the flag, it started breaking through the VWAP anchored from the high, and it started breaking out through that flag, and I jumped it, and then it. So I was down on this one for a little while, but now it's moving and shaking. And this was one that keeps hitting my relative strength scan over and over and over. And I missed the move earlier this year, and I've had alerts set on this one. So I finally got involved, and it's paying nicely this morning.
Nice
Does anyone know the news?
Yes, there is news. Last night, they doubled their dividend last night. And they also said we're going to buy back more stock, and they raised their guidance for the year. So
they raised guidance, raised their dividend, and announced a buyback.
Well, they announced a bigger buyback.
Got it.
Yep.
Yeah.
Okay.
Yeah. All of those are good things, I suppose.
All good things. Right? Yeah. All good things.
Yeah.
So unfortunately, when I was putting the slides together last night for the show today, I wasn't aware of this news yet. So obviously the chart looks a little different than what it does now. And you've kind of missed this move. Obviously we're up, 15% today. So sorry, this one's kind of already left the station, but
this is industrial.
Mm-hmm.
GE Vernova. So this is the industrial side of the operations here. So this is $200 billion company. There it is. It's number 1, 2, 3, 4. It's number 5 in terms of weightings in the industrial sector. GE Aerospace is number 1. GE Aerospace double the weighting as GE Verona.
I have a crazy idea. Why don't they just combine all the GE companies? GE Healthcare, GE Nova, GE Aerospace, GE Finance.
I thought that was the whole thing that they just separated. GE.
I think he's making a joke.
Okay, all right.
No, yeah, that was a disaster, and they thought they thought they were a bank. Remember that?
Right.
That was adorable. Remember when they thought they were a bank? That was hilarious.
So
good times. Nice trade here, Mary. Nice job.
Thank you.
What else you got?
Now it's about managing. Yeah. So we've been kind of consolidating here. We had the correction into November. The last couple of days, if not week and a half, it's just been consolidation. I've really been waiting for SPY to kind of get above and hold. What is it, about 685? Kind of that higher high area, and we're just kind of chopping around there. So with the Fed happening today, I kind of feel like we've set up now, we've consolidated, we've set up for a nice move higher is what I hope, but I'm kind of waiting to see because if we break down below, let's say about 677, then I feel like there's more risk to the downside on SPY specifically. So I'm kind of waiting, and in that waiting, I've just been doing a lot of shopping. One of my favorite places to shop is semiconductors, and SMH is kind of, it's set and ready to go and break out to new highs. And so I've been poking around in the semiconductor space. AMAT is one that is already breaking out to new highs. So this is on my radar. I'm not in this one currently, but kind of waiting to see, like I said, what happens today and the rest of how we close the week. Another one that came up on my scan is an SI Time Corporation. Great base in this one, and this one also already breaking out.
What is
this? It's a semiconductor. Never heard of it. Never seen it before in my life.
What kind of scan helped you find this?
Just I use a TrendSpider, and they have a scan that is relative strength compared to. You can choose, but compared to that, I always look at the S&P 500. So outperforming the S&P, and then I just scan specifically by sectors or industries that I'm most interested in looking at. And so this one came up as particularly strong compared to the S&P 500, and for good reason. It's breaking out here above 345, and we're above that. And again, if we're going to rally into year end, if it's going bull market back on and bull market party, you've always had the chips at the party, right? So
and relative strength.
Yep, exactly.
Yeah, this looks great.
Thank you. Yeah.
I mean, it's up 150 points in a couple of weeks, but I mean, bigger picture, this is a big.
Yep, exactly. And
Nice.
There's a lot of names, honestly, in the semiconductor space, and there are some that are super extended, like looking at you, MU. But there are some really nice setups in the semiconductor space. And like I said, depending on kind of how things shake out here, I feel like we're ready to go into year end. And, Santa Claus, ho, 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 here he comes. I know that's not until the end of the month, but we're set up, I think, nicely to go. And, I love looking at the biotechs if we're in the risk on mindset. And so this is a really great one. They had that rough day yesterday. So maybe this needs some time. They've been moving really well here. I mean, they've paid us so well here the last month, 2, 3. It's just a pond that I keep fishing in, and Bridge Bio is right here at a very obvious level of resistance. Hopefully we go through it. What is that, about 74? Above 74, got to be long, and use that 74 as your stop.
I got calls that more than, I think my calls are up like 400, 500% at this point, but they don't expire until July of next year. So I'm just kind of sitting tight. Short term, I would expect some pain, right? I mean, back at this form of resistance, right? So I'm really curious to see how this acts.
Yep. And I mean, I guess, the other thing you're talking about with the Fed happening today, it kind of seems like everyone knows that there's going to be a cut. Is that like been announced, or
that is a foregone conclusion? Yes.
I'm here to tell you, Mary, you know how much I follow the Fed, right? You know how I read all these transcripts of all their meetings. I read them all, right? I got AI giving me the notes, right? And I'm here to say, no, I mean, you go to the CME. There's a Fed Watch tool on the CME. And then you can get all the probabilities for all the meetings.
Oh, okay.
That's what everyone does.
Information.
Yeah.
Okay.
I'll send you the link, Mary.
So then, probably some of these moves might already be priced in. And like I said, that's why I'm kind of sitting on my hands and waiting and watching. So the biotechs, I think, still have been really great the last couple of months. To your point, JC, it might be time for a cool down, but I do like that bridge bio if we are above 74. And last chart I brought along is software. Actually, no, this is computer hardware, the ANET. And what I especially love about this one is we had the breakout. And then here in the last couple of weeks, we broke back down below about that 134, and we've got a nice little scoop and score set up. So above 134, I like this one long to the upside, especially if we are in rally mode into year end.
And you think we're going to be in rally mode into year end? I mean, you're Miss CMT now, so you tell me.
Still learning, Miss CMT. I don't
know. You're big. You're a big shot. So I don't know. I don't know anything, Mary.
I just follow price, JC. If price is above my line in the sand, I'm long, and if it's not, I'm out.
Smart gal. So, smart gal.
Hey, you have to learn the hard way, and I learned the hard way a lot early on. And hanging around with you guys gave you a lot more risk management ideas and. Having rules before you actually even enter a trade and going through the CMT curriculum and, all those different things, also managing my own biases. For example, I love to poke around in the semis, and that's a recency bias because I've been so successful in the semis with the biotechs. And that's something you have to be aware of, right? So you guys are talking about energy, and there are some really interesting setups going on in energy. Gold, there's tons of charts that look really spicy in gold right now, and those have been working. And so you have to manage where you've been and what has been successful, and also be able to change your mind quickly, because those things can stop working very quickly. We could get the rotation, and you need to be able to pivot.
Mary, make sure you tell us when you get back into the crypto miners, all right? Because that was a big thing for you, right?
Yeah,
I do. Yeah. Oh, I still am in some. They're old positions.
Okay.
And that's a cost basis problem of
got it.
Just. I feel like there's going to be one. I feel like there's going to be one more push, one more big push. I'm going to probably sell most of the positions and.
Hashtag tax problems for Mary. Okay. Let's get out of here.
I was looking at those seasonal charts of those midterm years.
Right. Big day for us on the channel. We got Kenny going live at 11, Sean live at noon, Mackie live at 1. We'll be live at 2:30 after the Fed thing, and then we'll talk about the reaction. And then Riley live at 5. He's talking about AI defense stock. I don't know what is in his world, but he's always talking about cool stuff. So that'll be at 5:00 today. Godspeed. And that's what we got going on. So thank you to our guests and everyone in the chat, and thank you for watching, and go make some money and get our emails. The links are in the description on YouTube, and we'll see you guys tomorrow. Have a good one, or later.
Yeah, we'll see what the Fed.
I can't take no loss. I don't need no